All right, welcome back to Squawk. Our guest this half of the hour, Dr. Johanna Chua, Chief Economist, Asia Pac at Citi, was very kind to give us another dose of the right medicine for the holidays by sticking around to finish the chat list. We left off on the targets, potential outperform targets. What are some of the downside risks? What are the aggravations that could really be a drag on things going into 2011? Is it inflation? Is it food price inflation? Or what really tops your agenda?
Well, one of the risks, as I mentioned earlier, there is a risk that central banks in Asia may be keeping monetary policies too accommodative for too long, monetary conditions too accommodative for too long. So there's a risk that inflation could be much worse than expected, and therefore that could create, obviously, some further tightening down the road. So that's one risk. A lot of people also are very worried about China. We've had quite a bit of sort of nasty inflation surprises out of China. So people are a little bit worried that after such an unprecedented expansion of credit in the last 2 years, to what extent does China have a good control over that and how that fuels inflation expectations? So at the moment, we are expecting sort of tightening on China, gradual sort of moderate tightening over the course of 2011, but still not enough to derail the growth outlook for China. Now, if it ends up being much worse than expected and they have to tighten more than expected, then that's also something that we have to watch out for.
Has China lost its way at all? We talk from time to time about the various measures which they're deploying.
Right.
Everything from telling banks how to do their business to trying to decree, limits to lending. But a lot of this stuff isn't working, though. You look at the banks, and they've already lent their quota for the year, and there's still X number of weeks to go in 2010.
Well, to a certain extent, they are probably going to exceed their new lending target for this year, and there are certain amounts of credit that are outside of the banking sector. But I do think that China is taking a much more preemptive stance than they had in the past, so I think they're quite serious now about trying to curb inflation. The jury is out. The jury is still out. We'll still have to see how things pan out next year. And our base case is that inflation doesn't get too out of control. We think China's inflation next year averages about 4.6%, and it peaks at around 5+%. But we don't expect them to sort of go back to sort of the quote-unquote overheating episode we saw in 07, 08. But as I mentioned, I think the jury is still out. We still need to see how things pan out. The other risk factor I think we need to watch out for next year is obviously external factors. What's happening in Europe and how that drives risk appetite. And as I mentioned to you earlier, we've seen quite a bit of a sell-off in U.S. Treasuries. If we get a much more disorderly sell-off in U.S. Treasuries, that could create volatility in the markets in Asia to the extent that some of the inflows in Asia had really been funded by cheap dollar funding costs.
Joanne, I want to explore this concept a little bit more. If inflation is stronger than expected and central banks do have to tweak monetary policy tighter and faster, because this does seem to be an obvious risk. If you look at some of the reports coming out from the States about purchases already pre-Christmas, been a little bit stronger than expected. We've got news now out of the tax cuts, which may sustain Asian exports for a little bit longer. We don't know how Europe recovery is going to play out in 2011. Isn't it the case that if these factors are stronger than expected, we could see faster tightening?
Absolutely. Now, there is another policy option. Tightening doesn't have to be just driven by interest rate hikes. The other way that they can tighten monetary conditions is basically let the currency appreciate much more than they've had. And that's another way, and that partly fuels our sort of view that next year we're going to continue to see further currency appreciation. So it doesn't have to just purely be borne by rate hike. And therefore, we expect that a combination of rate hike, currency appreciation will at least help temper some of the inflation pressures without derailing growth too much.
Joanna, I'm going to go out on a limb here and be something of an optimist. If we do see the recovery in the more mature economies of the West gather some momentum in 2011, is it a risk for Asia then? Is it a risk for emerging markets that we could see some reallocation, reweighting back to those more mature markets and away from the EMs?
No, obviously it depends, right? Obviously, if let's say advanced economies in U.S. growth is actually much stronger than expected, certain parts of Asia, like for example, Korea, Taiwan, equity markets are much more cyclical. They could still sort of tie their fortunes to the global growth recovery, but it will probably be harder for some of the ASEAN markets, the markets that have been more domestic demand driven, to perform, given that we could have, because the valuations are a little bit higher and we could have a bit of reversal. But and obviously if U.S. and advanced economies growth is actually much better than expected, then we're all going to worry a little bit about the global sort of inflation trade. So yes, we could have some periodic sort of volatility, but again, if a healthier advanced economic environment doesn't necessarily have to be bad for EM, because obviously it helps Asia, because Asia's export growth obviously is also supported.
Right.
But of course, you're going to have these episodes of volatility as people unwind positions on the back of that.
Now, putting this into action, finally, Johanna, you are very succinct in your prescription. Long Asia, ex-Japan equities go with high yield credit in Asia. I'm just wondering why ex-Japan? Isn't that the sleeper market where they're finally getting their act together? I mean, it's on the move.
Well, you know, I cover emerging Asia, so emerging Asia.
Oh, that's somebody
basically
else's job. Okay.
Right, but anyway, this is our equity strategists. Our equity strategists are calling for 25% up for Asian equities ex-Japan, and I think our outlook for 2011, we prefer some of the North Asian markets versus the Southeast Asian markets. So, for example, Hong Kong, which is a liquidity reflation play, Korea, Taiwan, which has a bit of sort of a cyclical recovery play, and then of course FX. We think that if we are more pro-risk, you want to go long the currencies that are more sort of higher beta, so INR, peso, and Korean won. And at the same time, in the credit space, because we've already, you know, with this recovery, and obviously we've seen some of the treasuries, you know, backing up, you have a bit more cushion when you sort of play the higher yield credits than the lower spread products that are much more susceptible to the volatility in the U.S. Treasuries.
Johanna, thanks for a great year. We'll make 2011 another one, okay?
Thank you very much.
Have
Thanks
a good
for having
holiday
me.
with your two little rugrats in tow. Johanna Chua.